Hey guys, this is Ben Rudman with Muscle Up Startup, and I'm here with a tutorial for how to use our Excel model. I'm sure some of you who have downloaded it have some questions relative to how to operate it, and so I'd just like to give a quick rundown that will give you a sense for what the purpose is, what the rules are, kind of, so you don't blow it up. And if you have blown it up, let me know, and I'll send you just a new one. And kind of how to get the most out of it. So starting at the top, I purchased this thing at muscleupstartup.com. I added this to my cart and I purchased it, or I bought the full suite that gives you the book, the model, and the business plan. The book really details a lot of the why, so I'd highly encourage you to buy it. I mean, $99 for this stuff is not much. If this helps you gain one customer and they stay for 2 months, you get like a 4-to-1 payback on this. So highly recommend just buying the book, and at the very least, just print it out and use it as toilet paper if you don't like it. But I think it's pretty darn worth it. Of course, I'm biased as well, so take that with a grain of salt. But the Excel model here has a few rules. So if you click on it and it has this little drop-down tab, you have your free reign to play with it and do that. If something is in blue font, you can edit it. So that's going out this way. That's walking down. If something is in black font, I would recommend you don't touch it. You can, though. It's your model, so do what you want with it. But if it blows up, just let me know, and I'm happy to help fix it. The way this thing works is in this assumptions category, you're changing basic things about your business, and this model is giving you an output. For those of you who kind of have a don't show me how the sausage is made attitude about this, which I don't necessarily recommend. In some cases, that's great, but I would recommend getting into the nitty-gritties because this is going to help you strategize and plan your business and understand drivers. However, if that's where you're at right now, that's fine. And what to do is that, especially if you're just starting a gym and you just want to know how much capital do you think I need. I need to have some big number. Here's your big number. This total funding need takes the accumulated deficit or earnings in the business over a period, and basically says, okay, the lowest the accumulation ever gets is $27,000. So you'll need to go $27,000, well, almost $28,000 into your own pocket to fund this thing. So after that, you're cash flow positive in like month 7. So your accumulated deficit will reach 27, and then you'll start going the other direction on up to being well into the black and hopefully generating a nice return on investment and generating a little bit of wealth because you're going to be working hard. So that's what this thing does. The real thing this does is it helps you budget and make projections based on real assumptions and business drivers, as opposed to, I think we can grow 10% next year, my CPA said expect this or expect that. This really helps you look through the windshield and not the rearview mirror, not the here's how we've done things in the past. This is how many classes can our gym facilitate a day? Is it 20? Is it 40? Is it 10? How many customers can my gym hold? So you tell me how big do I want to be? I want to be a 400-person gym, so I'm going to max this out up here at 400. In my model, in 36 months, it never actually reaches that, but that gives you an idea, right? Am I going to do group classes and events every month? Yeah, I'm going to do 5. I don't know. I'm going to do 1 here. These 3 numbers are an iteration that is created. So that is created by the drop down down here. So let me actually just start up here and start walking down. Client acquisitions. How many clients can you add per month? That's the first question, right? So in month 1, I'm going to add 10. Month 2, I'm going to add 20, and so on and so on and so on. So that's the idea. Down here, after you've made your selection of which one of these to use, so there's high, medium, and low, you can change that. High is going to be 12, low is going to be 6, medium is going to be 6, low is going to be 2, whatever that is. You can change that, and you can choose between them and scroll down and look at what your number is going to have to be. kind of do some iterations in your mind, write these down, think about it, chew on it. That's what the purpose of these, having 3 of them, is there for. There's a customer churn number, which I think is important. I mean, because you guys, the best, the big boys, 24-Hour Fitness experiences 33% churn. 1 out of 3 people leaves their gym. 1 out of 3 customers is out the door. So when they're growing, they're taking 2 steps forward and 1 step back. Maybe you're taking 3 steps forward and 1 step back, or maybe your churn has been as low as 5%. You've lost 5% of your customers. Go back through your records and see if you can identify what that is, because that's a big driver of the numbers, right? So here this is. So I've got medium on right now. So I'm adding 6 per month, but I'm losing about 1 every month. So I'm on a net basis, I'm adding 4 to 5, and that's kind of what my revenue base is based on. So that's something to consider there. Groups, say you're not going to have groups. Use this groups per month. This takes you out month to month. As you grow, you'll be up to 1, 2, or 3, or 0, whatever that is, and how many people in a group and how much you're going to charge per athlete. That's simple enough. Merchandise, this is just a swag. Remember, this is not detailed budgeting. This is projecting. This is kind of coming up with what you think the total capital you'll need to fund the future is going to look like, etc. The one thing this is not built for really is it doesn't look friendly for existing gyms. If you just hard code this number, say you already have 250 people, that didn't work. Shoot me an email if you already have an existing gym and you want to know kind of where to start. I'll send you something that might help. If you're looking at starting a new location or something like that, this should be perfect for you. This is the same iteration as the number. So this is prices. So we've seen, it used to be that the average was kind of $125 a month. I feel like that's more, upwards of 150, 175 is average, even upwards well into the 200s for many folks. Specialty classes, etc., might even up that a little bit more for what the average member is paying you in fees. So play with that. Change these numbers. Use what applies well to you. If don't just spitball it. I mean, if you're in Central Arkansas, you're probably not going to get $225 a month compared to if you're in Miami or Brooklyn or someplace with a high cost of living. You're probably going to be able to do that. So, but just get a sense for what's going on around you. It's sensitive to what neighborhood you're in, what real estate prices are, etc. So. Certainly the swankier areas and bigger cities with higher cost of living are going to be able to justify prices probably upwards of $300 even. So, and especially if you're in a specialty niche, if you've got high school athletes coming to you, or you've got, you're known as the go-to for this or that, or you're in Malibu and you train the celebrities. There's probably 0 of you out there who do that, but you get the idea. If you have a specialty, you might be more defensible and might be able to justify a higher price. So your merch sales, if you're selling a T-shirt per month or something like that to an athlete, a T-shirt and 2 kill clips or something, get a sense for what you are getting or what you will get. And it's not a huge number either way, but this is so if it costs you $10, to purchase equipment or purchase the merchandise, but you charge $13. Maybe it's cost plus 25%, maybe it's cost plus 30%, whatever it is. Feel free to put that in. This is a black number, so we're not going to change it, but it is blue down here. So how many athletes per hour can you fit in there? How many? A better question is how much square footage does an athlete need? We did some homework in the book and explained how we got these numbers, but you may have a better idea of what the numbers will be for your gym. So go ahead and play with those. Don't forget your affiliate fees, utilities, full capacity equipment, insurance. This equipment need is interesting. So it's based on the number of members you have in your gym and how many athletes per class you can fit, right? So how many people in your gym per hour are using equipment, and that's how much equipment you need. So in this model right here, you need $11,000 equipment at all times, so you're just going to be basically buying equipment up front, and that's it. But let's say where we think we can grow pretty fast, we're going to have a pretty high number of customers pretty fast. We'll get upwards of, say, 540 out here. So my equipment need, well, it should be going up, I would think, but maybe we're still in a number where it's not. So especially if you have 3 people per piece of equipment, that must be what's doing it to us. Yeah, so there we go. So our equipment need just went up by changing that. We're going to be deploying it in chunks. Your TI build out. Look at that. $10 a foot is what I'm kind of thinking, but that's kind of based on experience of doing retail space build out or kind of office space build out even. So maybe that TI is less for you. Same with rent up here. If you're paying $10 per square foot per year, that's what I have for retail slotting. Maybe you're in New Jersey or Houston or something where you can use, industrial space or something like that, and that might even be half. So just think about that. Trainer capacity. How many folks can your how many people do you need? So if your gym has 160 members and a trainer, or trainers, maybe 2 part-time trainers or something, work it combined 10 hours a day, and they can carry 16 people a class. Their capacity is 160, right? As you grow, you'll need to hire more trainers. That's the idea there. I have trainers getting paid $40,000. Owner salary right now I have is 0, because as you grow, as membership revenue grows, that's where finding a way to get members in the door is where you add the most value as an owner, not training. And that's a big thing. And you may at the start have to train. So you may be one of these $40,000 people, $40,000 people, and that's what I've budgeted in, but you're paying yourself out of your own funding needs. So that's not an efficient return on your capital. However, if that's reality, that's reality. And as you grow, maybe you can make a couple of hires and step out and then go into business development so you can get this number going and get your gym growing and running on its own. So it looks like the equipment CapEx line is not quite working right, so I'm a little bit confused as to why that's 0. But I'm sorry, you're leasing. So my mistake. So you're leasing equipment, and you're making principal payments on the lease. That is calculated back here. Most of you should be leasing equipment. I mean, it's so much cheaper to do it that way. There's just no reason to pay cash for $5,000 of equipment. There's just no reason to do it at all. So if you're going to do that, then you let me know and I can help you model that. But it's just not a good idea. I would really highly recommend leasing it. It's just not. There will be diminishing marginal returns on that equipment. It's going to go out. It's going to be fully depreciated in 5 years, and there's just equipment breaks. Sometimes there are warranties from these leasing companies. No reason not to lease it. Here's your TI and your equipment stuff getting built out down here. You'll notice that these numbers are black. This is because this is your monthly profit and loss statement. These are your results. So this is net income for a period. You've probably seen that if you've reviewed your tax returns and what your kind of CPA is putting together. This is how much cash is being expended in a period. This is your balance sheet. These numbers, they get a little sophisticated, but really this is what it's saying is, suppose suppose you, number one, say you get paid your membership up front, and then you provide the service, and there's nothing in the contract that says they have to pay next month's when they terminate. If that's the case, if they don't have to pay next month, then you have basically 0 because you already got paid, and you just now have to provide the service. However, and your accounts receivable is 30 if you're owed next month's, if they ever break it up, because you are always a month ahead. You will always be owed next month's, and so regardless of when they break it up, that's if you're month to month. If you're on a longer term model where they have to pay next month, the same logic applies. If not, the same logic applies. So let me know if you have any questions. These numbers, this wages payable, you pay people every 15 days. It's that simple. Say, oh, I pay people every 3 weeks. Change it to that. Accounts payable on the merchandise. Say you pay those bills. You get a T-shirt. You get a load of T-shirts and Kill Cliffs, and you pay those within 15 days. Then make that number 15 days. Say you stretch them out to 30. You pay 30, and that affects your working capital, your balance sheet. Your balance sheet is just giving you a snapshot. Here's how much cash I've got. Here's where it's going. Here are my assets. Here's what's generating the revenue in my business. And you can't see on the balance sheet the intangible assets, so it doesn't mean as much for you. But what it does at least give you a sense of is the changes in month to month in the balance sheet are reflected in the statement of cash flows. So I just dropped $11,000 on CapEx. This is actually just through the lease. And here's what's happening month to month based on the income in my business. It starts at net income. We explain statement of cash flows in the book. Get the book. It's, like I said, it's well worth it. This P&L gives you a summary of what it'll look like year 1, 2, and 3, especially if you're creating something for a bank or for, suppose you've got shareholders or friends and family that you want to report to, and you're putting together a business model. The business plan on the website has a spot for projected financials. Here you go. This is your projected P&L. Here's all these projections. You can summarize these, etc. And your equipment lease back here. Probably don't play with this too much. There's no real reason to, but it's your model, so you're welcome to dig in if you want to get into the details. So that's kind of everything. That's how this model works. If you have any questions, email me at ben.rudman@muscleupstartup.com or B as in boy, RUDMAN 08@gmail.com. And just one quick announcement for you guys. For one, we have a blog. We have a couple articles up. How much space do I need for my gym? Just read this article. Actually, you don't even have to buy the book to get the most out of this model. And business management software. We have partnered with MindBody Online. They're basically gonna give all customers of ours, or anybody actually who hears about them through us, the first month free. So check them out if you want to get in software. This blog article reviews them all. We tried to be as neutral as possible. It does look like MindBody Online is one of the best out there. But here are 4 others too for you to check out. We tried not to be biased at all in our reviews. So hopefully this is helpful. And the last thing is there's this link up here for MindBody Online. And this is where we're working with them. So shoot me an email if you have any questions about this, and I can get you a free month if you want. Otherwise, shoot me an email over everything. I hope you guys are doing well. I hope I hope your businesses are doing great, and keep doing what you're doing. Keep following your passion, and we really look forward to getting to know you all. Thank you very much, and have a great day.